69,404. That's the astounding level the Japanese stock market just surged to, completely defying gravity after a historic 1% interest rate hike. Hello everyone, welcome back to AI Market News. Based on current market information, we're tracking three massive pillars of news today that are actively reshaping the financial landscape for all of us. First, a domestic shockwave in Japan with interest rates moving sharply. Second, shifting geopolitics in the Middle East rippling through global commodities. And finally, the absolutely critical U.S. Federal Reserve meeting happening tonight. Let's move right into it. Let's start on the domestic front. As you can see in the chart on the left, the Nikkei jumped an incredible 5.13%, closing right at 69,404. Meanwhile, looking at the currency markets, the USDJPY is holding steady at 16.236. For Japanese investors, this stark divergence is a crucial moment. We're seeing equity markets rally aggressively, even as the yen remains under significant pressure against the dollar. Now, let's break down the mechanics of what we're witnessing. For those newer to these dynamics, here's the underlying why. Typically, when the BOJ raises interest rates, the goal is to strengthen the domestic currency by making it more attractive to global capital. At the same time, equities usually drop because higher borrowing costs hurt corporate profits. But right now, market optimism and global momentum are clearly outweighing those borrowing concerns, which is driving the stock index higher even as the currency tries to find its footing. Pivoting to global news, we have a major geopolitical headline crossing the wires. Recent statements indicate a breakthrough regarding the Iran deal, specifically the reopening of the Strait of Hormuz. The why behind this headline's importance is that this is one of the world's most critical transit choke points for global energy supplies. Any easing of tensions here has an immediate cascading effect across global markets for all of us. And we can already see this exact effect playing out. The graph shows a steep drop in crude oil WTI, falling all the way down to 78.23. The why here is pretty straightforward. Easing geopolitical risks in crucial oil transit routes naturally lowers energy prices for all of us, simply due to increased supply certainty. Basically, when the fear of a supply disruption evaporates, the risk premium built into the price of oil evaporates right along with it, bringing some immediate relief to global energy costs. Turning to the currency side, charting at 99.66 is the US dollar index, or DXY. To understand the why behind this metric, we need to know that this index measures the strength of the US dollar against a weighted basket of major foreign currencies. It essentially sets the stage for broader US market movements. A steady dollar right below that 100 mark indicates that global capital is balancing itself very carefully ahead of the major US monetary policy decisions later today. Looking at the U.S. markets, the S&P 500 rose steadily to 7,431. Conversely, on the right, the VIX, often called the fear gauge, fell to 16.19. The reason we care about this inverse relationship is that a falling VIX indicates investors are pricing in much less expected volatility and risk in the near term. It paints a picture of a market that is feeling confident, choosing to buy into equities rather than seeking shelter. According to current market information from CNN's Fear and Greed Index, we can see the deeper crosscurrents driving this sentiment. Market momentum is heavily positive, and volatility is decreasing, which aligns perfectly with the rising stock prices we just discussed. However, safe haven demand is simultaneously increasing. The why here is fascinating. This tells us that while investors are eager to participate in the stock market rally, they're also quietly hedging their bets and buying safer assets as we all await the upcoming U.S. central bank announcement. So the crucial point is tonight's meeting of the FOMC. FOMC, for those unfamiliar, the FOMC is the Federal Open Market Committee, the body responsible for setting U.S. interest rates. Their decisions are absolutely paramount because they dictate global capital flows. When they adjust the cost of borrowing in the world's largest economy, it directly impacts everything from U.S. stock valuations to the strength of the yen in our portfolios. All eyes will be on their statement at 2 p.m. Eastern Time today. Before we wrap up, it's essential we look at the upcoming economic calendar. Beyond tonight's rate decision, we all need to be prepared for upcoming CPI inflation data, U.S. GDP releases, and the non-farm payrolls, or NFP, report. The why here is that these are highly sensitive, high-volatility events. They provide the exact raw data that central banks use to make their next moves, and any surprises in these numbers can instantly shift the trajectory of the markets we've discussed today. With the BOJ breaking tradition and global tensions shifting, the ultimate question is,
Will tonight's Fed decision pour water on this market rally or add fuel to the fire? Thanks for watching. Please subscribe and hit the like button. This video was automatically generated by Notebook LM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.